name is Bernard Lee. I'm the founder and CEO of HedgeSPA.
In the current low yield and high volatility market, HedgeSPA offers a professional investment platform that removes complexity, delivers a one-stop solution, improves performance, reduces volatility, streamlines processes, shortens implementation timescales, and finally lower costs. The platform offers an out-of-the-box solution that meets a variety of needs with end-to-end functionality ranging from asset selection to portfolio rebalancing to decision execution and to client reporting. It's powered by big data, AI, multi-scenarios, actuarial math, and extreme computing, and come with out-of-the-box data and transaction connectivity. These are the target verticals served by our solution, with 4 different service models. Today, we want to showcase our solutions that are most relevant for the Japanese market. Solution 1 will show how our cloud-based professional investment platform can serve institutional asset managers in general, but more specifically to do capital adequacy calculations for insurance company and pensions.
Let us show you how our platform can recommend the best way to manage your assets based on capital adequacy calculations derived from your policy pool. Insurance companies and pensions gain access to asset liability management and direct estimates of policy pool liability profiles, as well as tail risk views with confidence as high as 99.93%. The platform takes care of calculating capital adequacy ratios and cuts out middlemen costs to help meet liability requirements in a low-yield environment. This is a simple example of what our powerful analytics can do for an insurance company. Let us show you how to perform asset liability management for capital adequacy purposes. Let's select a sample life insurance portfolio. Our users can customize the actuarial assumptions on the liability side, such as mortality and premium tables. We can import this information directly from a policy pool database. Our system is capable of doing automatic rebalancing, including asset selection. We will rebalance our portfolio based on maximizing a capital adequacy calculation known as SCR ratio. Then we select a set of shocks to stress the portfolio based on regulatory requirements and run portfolio rebalancing. The system tells you the adjustments you need to make to your portfolio to lower capital requirements. Our analytics can rebalance the life insurance portfolio in trouble back to health in as soon as 2 quarters.
Again, the strength of our analytics is not hypothetical in that we managed to produce 15% of outperformance with no leverage within 4.5 months. We would love to work with more partners, users, and advisors in Japan. Solution 2 will be about our environmental, social, and governance, or ESG solution.
Welcome to a demonstration of how the HedgeSPA investment platform can perform environmental, social, and governance, or ESG functionalities. The goal of what we want to demonstrate today is different from the common industry practice to use fundamental criteria to screen out companies that do not comply with their ESG criteria. Instead, we think of ESG as a factor that can be used to enhance portfolio performance. Let us give you a demonstration. Imagine your client is looking at a U.S. multi-asset portfolio. First, up top in the portfolio pane, you can choose the portfolio you want to see. To your right, you can see the assets in the portfolio that you can rebalance. We identify the rebalance name based on an AI engine running through hundreds of factors. However, we enhance the methodology with the so-called tail risk so that the calculations will be correct for not just equities, but also for multi-asset portfolios, including bonds, commodities, and other alternative investments. Otherwise, the computer will ignore most of the investments with high tail risk, such as bonds and commodities. Well-cited investment research has found that typically you will need to rebalance no more than 10 to 15 names, even for an institutional portfolio. Now that you have the rebalancing names, we take those names to the bottom of the screen to check if these names are in the right places in their own country industry universe. Why? You only want to buy names on the top of its own universe and sell those from the bottom, not the other way around. This is where our ESG screening comes in. First, fundamental ESG scores can be used as an input factor to our AI engine so that it will screen for ESG results that lead to long-term investment success. Second, fundamental factors tend to be at least 6 months to 1 year old. We screen for ESG keywords in news and social media feed relevant to each company, and then assign sentiment scores to the news or social media articles. Then we model out how the sentiment scores based on past data may potentially impact asset returns in the current period. In other words, the rankings incorporate ESG information in proportion to how much they create an impact on asset returns.
As a reflection of our success, our work in this area in Japan and Korea was cited by Waters Technology, the authoritative American fintech newsletter. We would love to find more ESG data partners and users in Japan. Solution 3 will give example of our direct investment products.
Besides a portfolio analytics platform, HedgeSPA is creating a slate of investment products with a minimum asset under management of $500 million or 50 trillion yen. This is for investors who choose to place money directly into our investment products. We have spoken to the Japanese Financial Services Agency and are in the process of applying for the appropriate licenses in Japan. As one example, we currently run a portfolio for a major institutional investor. This portfolio produced 15% of alpha in 4.5 months during the lockdown with no leverage. In other words, we can create a powerful absolute return product simply by going long the portfolio and short the highly liquid KOSPI 200 futures. Another interesting example is a long maturity asset-backed security backed by alternative energy products. For instance, under a technology partnership with Georgia Tech, a top 5 engineering university in the U.S., we are putting in place hydrogen fuel cells to distribute electricity and clean water to islands in the southern Philippines that are not connected to the electricity grid. The hydrogen will be produced using high-temperature electrolysis in Australia. The local distributor is a top player in power generation in the Philippines. This will create a multi-year asset-backed deal that can be fully securitized. We have enhanced the deal by attaching carbon credits to them.
As a reflection of our success, we were a finalist for a Tokenized Asset and Digital Securities Award for the Green Energy Finance Fund. We are seeking partnerships with green energy technology providers in Japan and to work with local licensed financial product distributors. Japan is a key market for us. Our investor is so committed to launching in Japan that I have been asked to relocate to Tokyo. Our team is very proven in this space. In particular, I was a managing director at the portfolio management group at BlackRock in New York, where I built award-winning multi-asset functionalities, and was active at Nomura BlackRock Asset Management in Tokyo. Our team has won a long list of awards and market recognitions. Please feel free to contact me if you wish to discuss cooperation. Thank you.